Well, good evening, everyone, and welcome to this market update, 25th January, and we're now in 2023. It's been many months since I've done one because it's been tied up with other things, and to be honest, just waiting for these pullbacks to be over in certain things, which we'll go through now. So, as always, we'll start with gold. And gold, we had this level at 1807 marked in for a pullback. As you can see, it went much higher than that, up to 1935, and I'm now looking for this to pull back and possibly trend lower in the coming months. But as always, we have to see it step by step. So in order for that to happen, we've broken these highs here. Not this one, not this one. So at this stage, the daily for me is still bearish. Long term, shorter term, bullish. However, with the momentum we've seen in this deep pullback, retracement, if that is going to continue trending lower, we've seen quite a deep retracement, almost into 0.786. So are we starting to stall for a pullback? The coming weeks will tell. But for now, that's sort of what I'm looking for. I'm looking for this to pull back here, and then I'd be looking for a lower high to confirm that. Overall longer term bias bearish. If not, will we then break higher low compared to here, and then we break up past here if this is going to be a turning point. So that's what I'm looking for in the coming weeks, a pullback in gold. Silver, much the same. And silver, you can see we haven't had this rally like we had in gold. It's just been consolidating there. So we consolidated there. We've gone quite up much higher. And in silver, just moved sideways. So there's a disconnect there, therefore a non-confirmation between silver and gold. So I'm looking for that to roll over as well. And you can see we had this marked in for a pullback, and we did break through that onto $23 or $24 around there. So looking for a pullback in silver. Now oil longer term, we're looking for this pullback to occur. Oh, and it's almost happened. We're almost there now into, I guess, this area, 0.5 fib, $65, possibly lower, $50. So let's wait and see what happens with that. But looking for this possibly to go lower. But on a monthly, of course, this is much higher. This high here, much higher than this previous high. Here, higher as well. So it's pretty, overall, I would say it's bullish. Deeper pullback to coincide for this drop that I'm sort of forecasting in the coming months and this year. We'll get to that very soon. But yeah, oil lower. Now the dollar index had this marked in for a new trend, and that is correct. However, remember, Elliott wave, you have one to the lesser degree, one to the higher. So just to explain that, you'd have wave 1, 2, 3, 4, 5. Now is this a change of trend? Yes, short term. over the last months, but longer term, if you look very long term in the years, that there is still part of a 1 Elliott wave. So we're seeing just a deep retracement, like a 1, 2, before we see a 3, 4 and a 5, or is this a 4 before we have a 5? I'm not certain on that. I'd have to do the Elliott count. But looking for a dollar turning point very shortly, and you can see these candles pretty much all just moving sideways, not much volume. Possibly dip lower, as low as 98, 97.6 before turning around, but I'm looking for here around these levels we are currently, and the ones I have marked in 101, 297, 100, 908, or as low as 99, 571, 9 or 98, 976 before we see a continuation of that bullish trend that we saw in the last, pretty much since 21 September. Now in the yields had this rise, and then we've had a bit of a pullback. Looking for this possibly to go a bit lower, but longer term looking for a continuation in yields to rally higher as liquidity dries up and we enter, I guess, a contraction across the global economies in terms of lending and borrowing, because we've expanded for so long, for so many years. We need to contract and expand, contract, expand. Problem is central banks expand for so long to delay the contraction, and because of that, when it does happen, it can be a lot worse than it would need it to be if they dealt with it sooner. And of course you'll hear their narratives. So yields shorter term, possibly a bit lower before finding a floor. That's terrible, sorry. And then higher in yields. 30-year pretty much exactly the same, and the 2-year, you can see we haven't had much of a fall in 2-year bonds, and look at that, it's returning 4.152%, whereas a 10-year is lower. And usually in a market that's running well, you'd see a greater interest rate on longer term bonds, because you have to have your money, I guess, secured in that bond for a much longer period. So to attract investors, they need to appeal with a higher yield that it returns. So when you see the 2-year at 4.152, which is only 2 years, the 10-year 3.43, you can tell something's wrong. Why is the 2-year offering over 4%, whereas the 10-year, having my money tied up for 10 years, offering, what's that, what was it, 4.2 almost. It's about 0.5 basis points, 500 basis points difference, which is a fair amount. And then the 30-year, it's 3.58, which is slightly higher than the 10-year. But once again, the 30 years, that's a long time, it's still yielding much lower compared to the 2-year. So looking for these to retrace, then continue higher. And while we're on that, you can see this, the TLT had a big sell-off. So is this a wave 1, wave 2, wave 3, 4 possible pullback to that area? That'll mean a rise in yields, a drop lower, as I was saying, because when money's going into bonds, the yield is falling. And vice versa, when money's flowing out, the yields are rising. And if that's the case there on the monthly, then this to continue lower into 88. Now, what we've all been waiting for, the Dow Jones Industrial Average. Last update we probably would have been around here somewhere. October, not sure, I'd have to check. But we retraced significantly higher than where I was looking. However, still overall longer term. If you look at this picture, since this high back beginning of last year, 2022, we're still making lower highs and lower lows. Now some would say yes, that's the case, but if you're looking from here onwards, then you're only focusing on this, mainly. High highs, right, high lows. So I always like to combine them both, and yeah, if you're trading these little movements, that's a totally different story, but I'm more doing these as a macro sort of longer term picture. And with the Dow, I'm still bearish longer term on the indexes, because once again contraction leads to money selling off, finding cash to pay debts, higher interest rates, just a general feel of pessimism. And I think this will, it's definitely been due, as I've been discussing, and a lot of people are still very optimistic. Like it's been quite bullish towards the back end of last year, and I think there's still a lot of bullishness, even though some may differ in that sort of opinion or not agree with it. It's what people are like. Are you buying a lot, or are you selling, or are you on the sidelines in cash? So looking for this continuation to the downside in the Dow and other indexes. Possibly go up higher, up into here or here, before rolling over. Basically, that'll be determined in the coming days and weeks. Moving on to the S&P. Much the same. Turning point very soon, or will we see a bit higher before then rolling over? And this is 1, 2, this will be intermediate wave 3, minor wave 3, so it's going to be a significant move to the downside, and I'd expect that to easily go into 0.618, 3200, and lower to 7, and we'll see from there. But that's my first level I'll be watching, and then second. Put a bit of a short on last week. So I think, as I said, we look pretty bullish at the moment, and a turning point could be near. Nasdaq. Now this didn't retrace as much. Dow obviously retraced pretty high up here into November, January 13th. But you can see, if you look at the 17th, the 13th, and the S&P made a higher high here. On the Dow we haven't. On the Nasdaq we made a higher high also, and on the Russell not quite. So once again there's a disconnect between the 4 major US indexes. We do a turning point here and continue to the downside in all of them. Long bond, much the same as inverse to the 10-year yield. While the 10-year falls, the long bond will rise in line with TLT. So looking for this possibly a bit higher before rolling over. And currently we're 0.74% down on the futures. Volatility is up 4%, and crypto look, I'm looking for crypto to sell off as well in line with the stock market. I think there's a lot of bullishness and optimism once again that's returned in crypto, and it's never really left. Like, everyone is just expecting the past years to happen again, and it keep returning. But I think it needs an absolute washout with all the stuff that's arisen in some of these stuff, and you've all heard it. I don't need to mention it. There's just a lot of rubbish. It needs to be regulated if it really wants to be taken seriously. And yes, there are a lot of projects. Not all, a lot won't make it. That are solving problems, and it's not about, hey, you're going to be separate to regulatory bodies, and you're going to be, nah, it's not like that. You're dreaming if you think it is. And to be honest, you're making your life hard. Ethereum, looking for a rollover in this. Back up here into 1700. Bitcoin made a higher high. Still overall very bearish. XRP, much the same. Looking for them all to roll over. Still got cash waiting on the sidelines, because I'm not falling for this sort of hype at this point. I think what do we got? Total market cap currently is under 1 trillion. We've sold off from at 3 trillion almost. And you got the US stock market, I think, which is about 30 trillion. So that was 10% here. Now it's not even that. So look, it tends to move in line. Bitcoin tends to move in line with the stock market, and when Bitcoin moves, the rest usually follow. So I don't really look at all of them. Yes, they can have individual day-to-day movements, but overall they trend in the similar nature. So yeah, just waiting for lower prices here, and or we have pullbacks before making higher lows and continuing. Time will tell. So yeah, that's it from me. Look, I'm just sitting in cash. I'm patient. I don't chase. I know my plan. But yeah, follow your plan. Don't be swayed by others, or peer pressure, or what the media or everyone says. Just sit down, close your door, think clearly through things, your situation. What do you need? What lifestyle you want to be living? What income do you need to fund that? Are you relying on this, that, or the other? Do you have buffers in place? Just be, it's not that you're worried or you're fearing anything. It's just, it's like having a cushion or a nice comfy couch. When you feel the weight of your body lifted off after a, big day. It's there just to help you sleep in peace and not have to worry about things and not have to react. Just be ahead of it, be proactive. So yeah, anyway, stay safe out there. Could be some big significant moves in the coming days and weeks, especially as I've been sort of waiting for. That's why I haven't done an update, because we've just been waiting for these pullbacks to happen. But I thought it'd be a good opportunity to do one tonight, and here we are. But looking for this to start to roll over very soon, coming into the rest of the year. So yeah, take care, and as always, peace until next time. See ya.